Hi, Steve Sosnick here with today's Interactive Brokers Midday Market Update for Friday, July 31st, 2020. End of another month. They just seem to be either flying by or creeping by, depending on your point of view. And today's a very interesting day. We had been, warning about the prospect that we really needed to see very good earnings from the tech stocks that reported after the close yesterday because of their large index weight. And I will say that 3 out of 4 of them delivered. Amazon, Apple, Facebook all had big surprises and are all being rewarded right now with substantial moves higher. Call them in the 5% range, give or take, 5 or 6%, but things are moving around, so we'll see where they are. The interesting part is the market otherwise acts kind of lousy. This is kind of what I was afraid of, was that the tone of the market really has not been great. It's been leaning toward risk off, with the glaring exceptions of the stocks that have the biggest index weight. I shudder to think, let's say a couple of years ago, if Exxon, when it was a market leader, reported dramatically terrible earnings and the tone that would set for the market. Now it's sort of an afterthought. But that's because yesterday we saw $5 trillion worth of market cap reporting earnings yesterday. To put things in perspective, the Fed released its Thursday numbers, and the Fed balance sheet seems stuck at about the 7 trillion mark. So how's that for a comparison? These stocks have, to a certain extent, become the market. Now, they delivered the numbers that the market wanted to see. If you want a counter argument, Google, which reported good but not great numbers, is down a few percent today because the market was unforgiving of anything other than perfection. They needed perfect earnings, and to be fair to these companies, they delivered them. Now, the other question I would have is, for the analysts, whom I don't know personally, how'd you get it so wrong? How did you get numbers that weren't even close to where these companies reported? Had they been guiding analysts lower all along so that they can provide a dramatic beat? Or that's a whole other question for another time. Some other stuff to think about today, though, is realistically the advanced decline line, as we sit here now, is about 2.5 to 1 to the negative. Up volume, down volume is negative. Basically, most things are lower except for a couple of defensive sectors, a couple of stocks here and there, but we're dominated by Amazon, Facebook, and Apple, and so it's a very mixed day. I don't want to look. It's no point looking back at, well, should have, if these companies had reported lousy earnings, what would have happened? Well, it would have been terrible, but they didn't, and so. The next step is, as we go into another month, it's undoubted that we're seeing ever narrowing market leadership. As of now, we now move past at least the bulk of earnings season. There's still plenty of companies that have to release earnings, but the majority of the S&P 500 is out now, and certainly the majority of NDX, since plurality came out yesterday. We basically now have to get into the political season. Next week, we have to worry about, can Congress agree? As of now, no, they're not even close. They're not even in the same room. They're just literally, as I'm recording this, they're spouting insults at each other. And so the idea of a fiscal stimulus is pretty murky. Monetary stimulus, it was pretty clear from Chairman Powell's testimony that he's vigilant, but he's not really doing anything in the absence of a fiscal stimulus, because I think he kind of is taking the tack of, look, I did a lot here. You guys did a lot here. More needs to be done, but it's your turn. And so I think you're not going to be able to get that much out of the Fed in the short term. There's other stuff coming down the pipe. I mean, there's the political rumblings about delayed elections and other stuff. In a strong sense, we're going to get a better clue to what's coming on the Democratic side, because Vice President Biden is said to be releasing his VP pick next week. So there's a lot of news coming down, but the tone really is one of a market that feels like it's stalling. You see people moving to gold. You see people moving to silver. You see treasury bond yields continuing to decline to lower levels. You see the economic numbers, such as the most recent employment number, weekly employment number, showing some stagnation. A lot will be riding on next Friday's number, because the market's kind of hip to whatever the adjustments might be. And some of the weekly numbers that have been coming out really were not looking good. And the last survey ended before a lot of the corona rollbacks. So there's going to be a lot riding on this. And I think the bond market is telling you that they're a bit nervous of what's going on in the economy. Stock market, for the most part, is, but with a few specific exceptions. And again, the narrow leadership, I'm going to say they more or less needed to draw to a full house yesterday, or an inside straight, to put it in poker terms, and they did. They got a three of a kind, which is in many ways keeping the market up today. A lot to unpack for the next few days. We'll see what comes of things. In the meantime, have a great weekend, everybody, and talk to you next month. Bye bye.